Hey, welcome back to Harvesting Income. This is the Income Investors channel where you learn how to make and grow your income from investing. And today we're going to talk about how you can make income from Ethereum funds or Ethereum exchange traded funds. Um, Before we start, I just wanted to give you a quick disclaimer. I'm not a financial advisor or an investment advisor. So please take professional advice before you take any action on what you're learning from this channel. So this is just for knowledge purposes. Uh, Yes, it is possible to earn income from Ethereum funds, and one of the funds that I'm going to discuss today is Purpose Ether Yield ETF, and there are several other funds with similar strategies, but this is one of the funds which has a track record of 2+ years. So I'm just going to discuss this and give you an overall idea of how the fund works and what are the different aspects of it. Basically, this fund is known as the Purpose Ether Yield ETF. ETHY is the ticker symbol. And the fund invests in another fund, which is called the ETHH, which is a plain vanilla Ether exchange traded fund. And along with that, they write a covered calls. They use a covered call strategy to generate income from the fund, basically to generate distributions or yield that income investors like us are looking for. So that's what this fund is all about. And thirdly, there's no requirement for one to have a wallet or a self custody, which is required in case of any kind of cryptocurrency, whether it's Bitcoin, Ethereum, or other cryptocurrencies. You need to have a wallet to directly hold those physical cryptocurrencies. However, if you are going through a fund, the fund manager or the fund itself, manages those investments on your behalf. So with that said, let's explore more and find out what's in it for us. The investment strategy basically is involves holding the exchange traded fund, which is known as ETHH, which provides exposure to Ethereum, which is part of the same fund, the Purpose Investment Fund, and they write covered calls as we discussed on a portion of the portfolio. So basically, the entire portfolio is not used for writing the covered calls. Part of the portfolio is, is used for the covered call writing, and the other part is giving you direct exposure to the Ethereum price. So basically, what happens is portion which is tied to the covered call will have a limited upside, and at the same time, the downside also is kind of reduced to some extent. But the downside risk also exists, but it's kind of reduced to some extent. Um, this I will explain more as we look into how the fund works. So that will give you a bigger picture and better idea. So how does the fund work? Like there are uh, two or three broad steps they have. The first, the fund purchases Ether ETF, which is ETHH, and they hold it in the portfolio. That's the basic underlying asset. And after that, they override calls on about 10 to 15% of the total portfolio. So if the portfolio is, let's say, 100 million, so about 10 to 50 million would be used as for the call writing program, and calls are written on that portion of the portfolio. So the remaining part of the portfolio, which is not part of the call writing, will have full upside or downside depending on how Ethereum moves up or down. So basically, to put the long story short, the returns from the fund are in two forms. One is the yields or the distribution that comes from the covered call writing or covered call premiums. The second part would be the price appreciation, which is linked to the price of Ethereum. Price of Ethereum goes up or down. The fund has, you know, the impact of that. The fund also gains or loses based on the Ethereum prices. So the combinations of these two will give you the total return of the fund. And let's look at the quick numbers or the basic data of the fund. Basically, this fund was launched 2 years ago, and they have ticker symbol ETHY listed on Toronto Stock Exchange and also other major American stock exchanges. And the fund is the purpose investment is the fund manager, and the price is $4.25. This is in Canadian dollar, and management expense ratio is about 1.3%, 1.29, and the dividend basically varies from month to month. So in the last 12 months, from what I observed, like they used to pay around $3.30 to about $4.05. Sorry, 4 cents a month in the past 12 months. So it's 0.03 to 0.04 in that range roughly. The dividends are not, consistent. Like it can go up and down depending on the way the calls are written, depending on the volatility and depending on the price of Ethereum. So it goes up and down. And we will look at the price and dividend performance shortly. That will give you a full idea of how the fund works. When you look at the price, like we have about 2 years of data, 2+ years of data almost. The fund was launched basically somewhere in the end of 2021. So 2021 is like only 1 month they operated in that year, and in the last 3 years they have been, bringing in a lot of volatility. Like on the left, you can see the years 2021, 22, 23, and 24. And on the extreme right, I have marked the YTD year to date column just to show how much returns they made for that respective year. Let's ignore the 2021 because we have just 1 month data there. So if you look at 2022, they lost about 67%. So imagine the fund losing 67% in a year. And the next year in 2023, they gained by 71%. So that's the kind of volatility you see in cryptocurrencies. And the exchange traded fund will reflect the same. Even though it's a covered call ETF, you gain some, you know, income due to the volatility, but you can't escape the, uncertainty and volatility in prices. So this is something you need to be prepared for. So this is just in terms of price. Let's look at the other side of the story in the next page. Here we have the dividends. Um, so in terms of the dividends, dividends have been all over the place. Like it started from $3.03, 3.3 cents, and now it's all the way to 4 cents. Uh, it's all over the place. But when you add up the dividends over the last 12 months, it comes to about 44 cents roughly, 0.4435, and the price is 425. So based on these calculations, the true yield comes to 10.43%, whereas the yield stated on the website is 11.44, which is not that different, but it's different from what I have calculated. So you can expect to get about, double digit, dividend yields if the past performance continues in the future. Of course, I'm not a predictor of future performance. I don't know how it will perform, but it looks like they can deliver high single digit or double digit returns over the next few years. But the Ethereum prices are also going up, so you will also get a combination of capital appreciation plus the dividend yield that you're getting from distributions. Okay, now just to summarize what we have seen so far, the ETHY fund is not a perfect one. Like it has its own pros and cons. We'll quickly look at the pros, like which is easier to understand. Then we look at what are the downsides or cons. The first is like you get a Ethereum exposure, price exposure plus the income, and you're free from any self custody requirements. You don't have to have a separate account or a for the custody purpose, and you're able to diversify into an alternate asset class. And fourthly, it is listed on the Toronto Stock Exchange and it's highly liquid. You can buy and sell anytime. It's easier to manage. And the volatility is slightly lower compared to the original asset or the Ethereum. It is still volatile, but slightly lower compared to the underlying asset. So those were the pros of investing in ETHY. However, there are some drawbacks. One of the key drawbacks is the high expense ratio. And for smaller investors, this can be a downside when they are investing smaller amounts. 1.29% is the expense ratio. So it can be a bit expensive for very small sums of money. And you have a limitation on the capital appreciation on the upside because of writing calls. Obviously, when calls are written, the income generation happens on a regular basis, but the upside is capped because the strike price of the calls are written at that level, and so that's one drawback. And there's a high volatility and high uncertainty in terms of prices. You cannot project the prices, and there is hardly any research or any predictor to confirm that the pricing is correct or wrong, or how far you can see the upside or downside and so on. And since this is also a new asset class with limited history, that's another issue that you need to deal with, because there are not much published information. So you have to rely on a lot of news and latest developments. And variability of yields. So the yields from the Ethereum fund, ETHY, is not consistent. Like it can go up and down. Even if you see consistent, distributions by the fund, in reality, the actual income earned by the fund could be, higher, lower. It can vary from month to month, depending on the volatility, depending on the price of Ethereum, and depending on various other factors. So that's another thing to keep in mind. And last but not least, you also have some currency risk. Although the fund provides currency hedging, hedging can be favorable or unfavorable. So that's something to keep in mind. There is a bit of currency risk because the Ethereum is in US dollars, and then the fund converts that into Canadian dollars. So that conversion can, be favorable, unfavorable, depending on the foreign exchange rates. So those were the pros and cons. Like who would really be suitable for this type of investment, or who this will be suitable for. That's what we will see next. Um, who can consider ETHY? This is designed for someone looking for regular income plus exposure to the Ethereum prices, or people who have some kind of faith, or they believe that the Ethereum has a good potential. So for those people, this is an excellent opportunity to invest in the fund. By the way, this is not a recommendation. I'm just saying that this is, suitable for people who are looking for this type of exposure and also want to benefit from price appreciation. Of course, there is a limited appreciation because of the upside cap, and investors also need to be comfortable with high risk and high volatility, as we discussed in Bitcoin. The same points are applicable for Ethereum, and here you diversify into alternate asset class, which is cryptocurrency. And since it is a new asset class with a very limited history, experts recommend only about 5% or 10% exposure to Ether. So keep that in mind. Your overall exposure to cryptocurrencies should be about 5% max, or up to 10% if you have more knowledge, or if you have more experience. You can go up to 10%. So that's about the ETHY. It has its own positives and cons. It's an excellent one for people looking for regular income plus a bit of price appreciation, provided they have it as a small part of their portfolio. And so it is something that you can consider if you have some knowledge or some experience in cryptocurrencies, and you're able to understand and invest in it for the long run. I hope you like this video. Please feel free to follow the channel and share it with your friends and family. Have a great day. Thank you.